The shadow banking experiment. How invisible risk holds your money hostage. 1. The hidden empire. We're told the financial system is safe, accountable, and are regulated. But what if the real power players aren't inside that system at all? Welcome to shadow banking, a $250 trillion parallel world of hedge funds, private equity, and off-the-books leverage. It's the financial equivalent of a secret casino where the house always wins, and you don't even know you're playing. These institutions aren't your local savings bank. They operate in darkness, using borrowed money, sometimes 100 times more than what they actually have. When their bets go bad, it's not their balance sheet that breaks. It's yours. Because their losses spill straight into the banks that hold your deposits, your 401k, and your so-called safe retirement funds. So what does that actually mean? It means risk is no longer contained. The firewalls are gone. And you, the ordinary depositor, are the uninsured participant in someone else's high-stakes game. Footnote. Shadow banking hides private risk inside public institutions. 2. How the shadows grew. After 2008, everyone promised reform. Instead, the same problem just changed costumes. The subprime lenders became hedge funds. The toxic mortgages became derivatives. The leverage, well, that multiplied. Hedge funds now manage 15 times more assets than they did during the last meltdown. And while traditional banks lend from deposits, hedge funds borrow against debt to chase micro profits at maximum speed. The result? A powder keg of leverage so sensitive that one wrong headline, or one tariff tweet can spark a global chain reaction. So what does that actually mean? It means the world's safest asset, the US Treasury, now depends on the stability of unregulated speculators making trillion-dollar bets with borrowed money. Sleep well? Footnote. Leverage magnifies profits, until it detonates. 3. The Archegos lesson. In 2021, a single hedge fund named Archegos collapsed. It should have been a blip. Instead, it cracked open a window into the shadow world. Nobody, literally nobody, knew how overexposed it was. Not its brokers, not its lenders, not even the regulators who were supposed to be watching. When it imploded, it dragged Credit Suisse into the abyss, helping trigger that bank's collapse and merger into UBS. One hedge fund fell, and the shockwave reached Switzerland. That's how connected the shadows are to your checking account. So what does that actually mean? It means the next contained incident could easily be your bank. You won't know until it's on the evening news. Footnote. In a leveraged world, one domino can topple nations. 4. The legal trap, bailouts and bail-ins. Here's where it gets personal. When shadow bets blow up, the Fed steps in as lender of last resort. Translation, you pay for it. The bailouts of 2020 prove that trillions can appear overnight, courtesy of your future purchasing power. But there's a darker option hiding in plain sight, the bail-in. Instead of rescuing the banks, they rescue themselves, by legally seizing depositor funds. Yes, it's legal. Yes, it's been done before. And yes, it can happen here. So what does that actually mean? It means the phrase "your money in the bank" is more philosophical than factual. If you can't access it, it's not really yours. Footnote. Bail-ins turn depositors into involuntary investors. 5. The illusion of safety. You can do everything right, budget wisely, diversify your portfolio, keep cash in reputable banks, and still lose because the system itself is blind. Banks don't even know their own exposure to shadow funds. Transparency? Optional. Accountability? Outsourced. And yet, officials keep repeating the same lullaby, the system is sound. Sure, just like it was in 2007, right before it wasn't. The truth is that too big to fail has evolved into too dark to see. Footnote. Ignorance in finance isn't bliss, it's policy. 6. The sound money rebellion. This is why people are quietly exiting the system, moving into assets that don't depend on anyone else's promise to exist. Gold and silver may sound old-fashioned, but they don't need bailouts, stimulus, or central banks to function. They just are. So what does that actually mean? It means sovereignty isn't a slogan, it's a strategy. When you hold it, you own it. When it's digital, leveraged, or insured, you don't. In a world where risk hides in every balance sheet, peace of mind is a tangible asset. Footnote. Real wealth doesn't need permission to exist.